Have you ever wondered when exactly is the gold market open? Most new investors do. So let's start with this. If the gold market is open 24 hours a day, 5 days a week, yes, you hit at that right. Unlike the stock market, which has specific trading hours, gold does not trade on a centralized exchange. Instead, it's bought and sold through two major markets: the future markets and the physical gold markets, where people and institutions buy actual gold bars. You can access gold futures through a broker if you are interested in trading that way. So remember, there is no set opening or closing time for gold trading. This market stays open 5 full days a week around the clock. Now let's dig a bit deeper. Even though gold is available 24 hours, not all horses are created equal. Some periods are much more active and profitable than others. The European and American trading sessions are usually the busiest, offering the most opportunity for traders. In contrast, the Asian trading sessions tend to be quieter. That's because only a few Asian exchanges are open during this time. So if you are looking to trade gold, your best bet is during peak hours when the market is buzzing with activity. That's when you will see more price movement. That's when most trades will make their moves. Now comes to the big question. Should you trade gold at all? Is it still profitable? The short answer: yes, gold is a still solid investment and will probably continue to be the foreseeable future. Here's why: gold has something that never sells, like stock. Crypto does not always offer intrinsic value, and for thousands of years, gold has served a safe haven, especially during unset times. So, even if the price of gold does not always skyrocket during inflation, it still holds strong as a core part of the most investment portfolios. But you might be asking, should I buy gold now? That depends on your investment goal. If you are planning to hold gold long term, maybe for years, then yes, you can accept to appreciate your deliver average returns over time. On the other hand, if you are looking to swing trade gold, that's why buy low and sell high over short periods, then yes, you can potentially earn big profit. But remember, high rewards from high risk. Some price swings in gold can be significant, and without a strategy, you might end up losing money just as fast you make it. Here, another common question for new investors: is gold a safe investment? 100% sure, gold is considered one of the safest asset classes. Why? Because it is a physical commodity. It's real, you can hold it, it can't be wiped out by a market crash like some digital assets. Even gold can be large price fluctuations. The good news, the managed well, this fluctuation can lead to above average returns. Let's now talk about the future of gold. Can we predict what gold price will look like next year? Not exactly, but one thing's for sure. Gold has held value for thousands of years and it continues to do so today. That's not likely to change anytime soon. The most basic answer is the supply demand. When demand is high and supply is limited, price rises. When where the lots of supply and little demand is, prices fall. Simple, right? But there more to the story. Gold is used in a variety of ways: in jewelry, electronics, currencies, of course, investments. So supply and demand in these areas all influences the price. Another powerful factor, inflation. Golden is often seen as a hedge against inflation. That means when the value of paper currencies drop, many investors turn to gold to protect their wealth. Here's a real world example. During periods of political or economic instability, gold prices tend to spike. Think back to US-China trade war. Gold prices surged between 2019 to 2020, and that trend has continued to 2024 to 25. And let's not forget central banks. These big institutions around the world often stockpiles gold to support their national currencies and protect themselves from inflation. In fact, the central banks bought over 650 tons of gold in 2020 alone. That's huge boost in diamonds, a big driver of price increase. Now here's fascinating number. Gold is currently trading at over 3,350,000 per ounce. Compare that to just 100 million around 5 years ago, and you will see why long-term gold investors are still smiling today. But what about the times when gold prices fall? Believe it or not, gold often dips during times of economic and political stability. Why? Because when things stay calm and safe, people don't feel the urgency to hedge their money. So instead of buying gold, they keep their money in stock or saving accounts. And finally, let's talk about the US dollar. The dollar plays a major role in gold prices. Both are considered safe assets and they are constantly competing for investor attention. How it's work when the US dollar falls, gold usually rise because investors are trying to protect their money from a weakening currency. But when the dollar is strong, investors tend to move the money back into dollars and gold prices usually drop. So the two inversely related. If dollar down, gold goes up, and the dollar up, gold may slide down. Understand the relationship can help you make smarter trading decisions. So it all wrapped. The gold market is open 25 hours, best trading times as during US and European hours. Gold is still powerful investment both for long-term holders and short-term trader. Information, political stability, central bank service, and US dollar all factor of the price and gold value. Gold timeless, variable, and always in spotlight. Thanks for watching this. If this helped you understand the gold market better, don't forget to like, share, and subscribe for more investing crypto insights.